Hey everyone, welcome back to Corporate Decoder, the place where we decode the language of business. Today, we're diving into a report from Amtech Systems, and let me tell you, it's got a few surprises, including a vote on executive pay that wasn't exactly a slam dunk. Buckle up, it's going to be an interesting ride. We're going to pull apart their 8K filing to really see what's going on. This is a report companies put out to tell investors about big events. Think of it as a corporate breaking news bulletin. This report is dated March 5, 2025. This means the events they're talking about happened on or around that day. It is like their deadline for major news. The main event here is their annual shareholder meeting. It's where the owners of the company get to vote on important stuff. The date of this meeting was March 5, 2025. To start, we should know that on January 13, 2025, there were about 14.3 million shares of Amtech stock out there and able to be voted. At the meeting, about 10.3 million shares were represented, either in person or by proxy, which is just someone voting for you. That's about 72% of all the shares, so a good chunk of owners made their voices heard. First up was picking the people who sit on the board of directors. These are the folks who are supposed to be guiding the company. The shareholders got to vote on who they wanted in those seats. They listed out all the people that were running to be on the board. Each of them got a bunch of votes. Robert Averick got about 7.8 million votes for him, and about 103,000 votes were withheld. Withholding a vote is basically saying, I'm not voting for this person, but I'm not voting against them either. Then there were over 2.4 million broker non-votes. That's when brokers who hold shares for their clients don't vote on a particular issue. All of the listed nominees for the board, including Robert Daigle, Michael Garnrader, Asif Jakwani, and Michael Ludwig, were all elected with a majority of votes for them. It's worth pointing out that Michael Ludwig got significantly more votes withheld than the other nominees. While the others had around 50 to 100,000 withheld, Ludwig had over 1.3 million. It's hard to know exactly why this is the case, but it suggests that a significant number of shareholders had reservations about him. Next, the shareholders voted to approve KPMG LLP as the company's accountants, basically to check and make sure all the financial numbers are correct. This was pretty straightforward, over 10 million votes for, about 15,000 against, and 13,000 abstaining, which means not voting either way. So, KPMG is in. Now, this is where things get a little more interesting. The shareholders got to give their opinion on how much the top executives are getting paid. It's called a say-on-pay vote. It's not binding, meaning the company doesn't have to do what the shareholders say, but it's a good way to see if the owners are happy with the leadership's paychecks. Here's the breakdown: about 3.6 million votes for the executive pay, almost 2.4 million against, and 1.9 million abstaining. Again, there were 2.4 million broker non-votes. That's a pretty split decision. Usually these votes are overwhelmingly in favor, but this one shows a lot of shareholders weren't thrilled with the executive compensation. This could be because of the company's performance, or maybe they just think the executives are making too much money. Either way, it's a signal that the board needs to pay attention to what the owners think. Finally, there was a vote on making changes to the company's plan for giving stock to employees. This is important because it can affect how much stock is available and how it's given out, which can impact everyone's ownership in the company. About 7.8 million voted in favor, 88,000 against, and about 11,000 abstained. Again, over 2.4 million broker non-votes. So the changes to the stock plan are approved. And that's it. No other issues were brought up for a vote at the meeting. Now, what does all this mean for Amtech Systems? Well, a few things stand out. First, the election of directors seems pretty standard, but the amount of withheld votes for one director is noticeable and could signal some deeper issues. Second, the say-on-pay vote is a red flag. When a significant number of shareholders vote against executive pay, it means there's a disconnect between leadership and ownership. This could lead to problems down the road if not addressed. The amendment to the equity incentive plan being approved is generally a positive thing, as it allows the company to attract and retain employees by offering them company stock. Looking at Amtech more broadly, it's a company that makes equipment for the solar, semiconductor, and advanced manufacturing industries. Those industries are rapidly changing, so Amtech needs to be able to adapt. One of their strengths is their experience in these markets. They've been around for a while, so they know the ins and outs. However, a weakness could be their size. They're not a huge company, so they might not have the resources to compete with bigger players. One of the biggest opportunities for Amtech is the growth of the solar industry. As more and more people turn to solar power, the demand for Amtech's equipment will likely increase, but there are also risks. The technology in these industries is constantly changing, so Amtech needs to keep innovating to stay ahead. They also face competition from other companies, both big and small. In conclusion, Amtech Systems is at a crucial point. The split vote on executive pay is a warning sign that needs to be addressed. The company has opportunities in growing markets, but also faces challenges from competition and technological change. Whether they can navigate these challenges will determine their success in the years to come. It's definitely a company to keep an eye on. Thanks for watching Corporate Decoder. If you found this breakdown helpful, please like, comment, and subscribe for more insights into the world of corporate filings. What company should we decode next? Let us know in the comments.